Greetings in the name of Yahuwah and His Son Yahushua Mashiach. My name is Malak Shalomo. Today is the 8th of September 2024. It's 12:53 p.m. Eastern Time. And I'm going to do a trade recap and a little Wycoff analysis on Bitcoin. So I had a Black Sun strategy short yesterday from Camarilla R3 to Camarilla S3 from last night. So first off, I'm going to start off. I'm actually going to show you this on Bookmap as well. So firstly, I'm going to start off with the monthly chart here on Bitcoin, right? So in the previous video on my channel where I labeled it, I sold Bitcoin and this is the reason why. I sold all my Bitcoin and this is the reason why. So let me just quickly go over this Wyckoff distribution here on the monthly chart, right? And kind of do a top-down analysis, right? So firstly, this is going to be the preliminary supply, which is at 58,367, right? So this happened in February, right? 2021 February, we had the high of 58,367. So that marks the preliminary supply, right? Then we have here the buying climax. So let's see when that was. So that's in April 2021. We had the buying climax. And then let's see here. After the buying climax, we created the automatic reaction, which is at 28,000, right? And that happened on, let's see here. That was in June of 2021, right? So the low of June 2021 created the automatic reaction, which is at 28,000, right? So after the automatic reaction, we came up here and we created the uptrust, right? Which is a break above the buying climax. So the high of that candle right there, which is in November 2021, right? We had a high of 73,835. No, my bad. This candle right here. So, right. So, yes. No, actually, it's 69,000. My bad. Right. So, this candle here created the uptrust 69,000. You see that level right there, the purple line. That's my uptrust, right? And actually, I forgot to mention this as well. In September, we created the secondary test. So after the automatic reaction, we pop up here to create the secondary test. And you see you get a supply there, you get resistance, right? Then it balanced itself right here from support. And then we created the uptrust that breaks above the buying climax, right? So after the uptrust, we came down here and we created the minor sign of weakness, which is November 2022, right? And that low is 15,460. So let me point that out. Right, so this is your secondary test. That's your uptrust. And this is your minor sign of weakness, which breaks down the automatic reaction level, right? So that's how you find the minor sign of weakness is when we break down this initial automatic reaction from the buying climax, right? So after that, we found support, rallied above, broke out big, and we formed this uptrust after distribution. Hold on one second. All right. Right, so that forms our high right there, uptrust after distribution, which is an uptrust that breaks after the first uptrust, right? That breaks above the buying climax. So we have another high right here, uptrust after distribution. You see it's labeled UTAD, and that's at 73,835, right? Now, within the distribution phase, of the Wyckoff theory, we're now at a level where we're supposed to start breaking down and really flushing down below the minor sign of weakness, right? So at this level here, I'm looking for volatility after the uptrust after distribution. I'm looking for the volatility within these candles where it's basically like it's like buyers selling out, right? So you're gonna have these dips to the lows, and you're gonna have these violent reactions back up to the highs because they're actually trying to support the price at the secondary test and get it back up to the best fills they could get, right? Because they're trying to get the best prices, which is the highest prices. I think Jeremy is on in Discord. I- Okay, cool, cool. All right. So I'm recording a video for YouTube as well, but I don't think people could hear you when we do this. I'm not I'm not sure how that works though. We gotta kind of work on that to see if we could get like the recording on YouTube. But like when you make the videos, it doesn't record like the person who's running the channel, like how I have the live going on. You could only hear that person. You can't hear the other person who joins, which is you at the moment. So we gotta kind of find out how to get that working properly, you know? No, like when you're recording the video, um like if like how I'm recording this video right now, people are only hearing my voice when I upload it. They're not gonna hear your voice. Like right now they think I'm talking to myself. Yeah. So we gotta kind of find out how to fix that. Okay. Right. Okay. Right. All right. Okay. I'll have to check those out. I'll have to check those out. Yeah. So let me go back to the video because people are probably gonna think I'm going crazy right now. So in this uptrust after distribution, this little what you could call it, like a little distribution here, but it's monthly candles, so it's quite a long time this has been going on, right? So you can see the wicks at the top side where buyers are actually selling out here, right? So they get trying to get the best prices up here, but there isn't enough buyers to follow through. So when the buyers push price up and they start putting the heavy sells up here, price just falls again, right? So there is no breakout in the near future, in my humble opinion. But anyway, from this point on here, we're supposed to start getting some patterns like this, right? So just trying to follow the distribution theory. And after the uptrust, after distribution, we're supposed to start seeing something like this, right? So we're going to get some flushes. We're going to get some pullbacks. Now, these pullbacks are going to be labeled lowest point of supply, right? And then you're going to get another break. You're going to get some pullback, and that's going to be another lowest point of supply. And that's going to keep on happening until we break down from the minor sign of weakness, which is actually at 15,460. So I know a lot of people are not going to believe that Bitcoin could actually get back to those levels, but the reason I think it could be possible is because of it's just accumulation by like the big institutions. How else would they get your Bitcoins? And how else would they be able to control Bitcoin? Because Bitcoin is coded in a way that you can't control it like how you control fiat currencies, like how they just keep on printing money. You really can't print more Bitcoin. What you could actually do is accumulate the most amount of Bitcoin, and that's the way you're going to be able to control Bitcoin. So I believe this is a process of gaining the control of Bitcoin, right? So as all these people here who bought at, let's say they bought at 30,000, right? You're definitely going to start feeling some pain because I believe there's a bear market coming. And how much pain could you really sustain? How much are you going to actually give back from these profits? Because we actually got up to, what is it, 73,835. So if you bought in at 30,000, you didn't sell within this little distribution that's going on here. When it starts breaking down to like 40,000, are you gonna keep it? Are you gonna hold it and just wait until it comes back up? Or are you gonna sell your Bitcoin and try and get in at these lower prices, like maybe 11,000, something like that, right? Now, that's that I'm not a financial advisor, but that's something that people who's holding Bitcoin gonna have to make some decisions, right? Because they're definitely gonna try and take that Bitcoin out of your wallet, right? So let's see how that goes. But me personally, I sold my little bit of Bitcoin and I'm just gonna wait until we actually finish this bear market that I think is gonna come into play. So that's my little technical analysis on the monthly chart. Let's see on the weekly here. There's a there's a better definition of the distribution after the uptrust. So you could actually see this is a distribution within itself. So let's say here is the let's say that's the oh wait, hold on. Let me fix this to arrow and come over here. Right. So let's say this is the preliminary supply. This is the buying climax. This is the automatic reaction. This is the, let's say the top of this candle could be the secondary test as well. Let's say this is the uptrust, right? Then we get the minor sign of weakness. We start getting some tests here that isn't breaking above buying climax. We get a pullback down here, which is another minor sign of weakness. We get a lower high, right? This is another test. And then we start getting the volatility here in these candles where you start getting the break of the minor sign of weakness. And now we're supposed to start seeing that distribution here, the breakdown of the minor sign of weakness, because this is a smaller distribution compared to the bigger one I was showing you before. So this is where you're gonna start seeing the flush down of this distribution because it's on a smaller time frame, which is the weekly, right? So I think we're setting up here to start the distribution, right? To create those lower points of supply, the flush downs and excuse me, the lower points of supply, flush down, lower points of supply, and flush down. So that's on the weekly chart. And let's see here. Let's go to the daily chart and see what we have. Right, so on the daily chart here, just using the monthly levels, this is the secondary test. And you can see here we're getting buyers trying to come back in. Now, the secondary test is basically, let me just go back up to the monthly real quick, just to point out what it is and why we might get some buyers here. Right, so the secondary test is basically a rally from the automatic reaction on the monthly chart, right? So this level here, the high of this candle, is basically resistance turning into support, right? So that's why you have these wicks here at the bottom. Buyers are trying to stay in the game here at a good what I call it, a significant level at 50,000 roughly. So right here is what, 52,000. So, that's like a psychological level. They don't want it to break below 50,000. So they're trying to support it right here. So you might see a little volatility. You might see a little sideways action, a little pop up here. But eventually we're going to run stops below here. I think you could just imagine how many stops are at this level here. If someone bought at like around 30,000, 34, the stops are going to be around this level. Plus, I was saying on my other video, we're going to have to clear this buying candle right here, right? Now, if you look at the volume on this buying candle on the monthly, is pretty low, right? So this buying up to this level here was actually it's a big operator operating, right? He did not have to buy much, hence the volume, to actually push this up because there weren't much sellers in the market. And if you don't have much sellers on the ask, when you do big buys, it's going to push through those levels on the ask pretty easily, right? So that's how we got up to that level. Now, in reverse, there's going to be a lot of stops here, right? Because a lot of people jumped in on this candle, the momentum traders and stuff like that. There's going to be a lot of stops here in this candle because it's a low volume candle. So when we start hitting this level, it could easily just in 1 month reverse this whole candle here back down to 42,000. And we're only at the 8th of the month right now, so it's September 8th, and we already got this much movement in the month already. So it could definitely cover this really quick, right? But will it do that? Not really sure. But just to kind of just demonstrate where we are on the daily chart, this is like on the verge of a stop run, kind of like what we have here, right? Now, on the other side of it, this could be a shakeout, a double bottom, and we rally again back above the uptrust level. Now, I think that could possibly happen if too many people are on the short side and the operator believes like, okay, well, I'm gonna have to run their stops because they're on my coattails too much because he's distributing, he's selling. Somebody has to buy while he's selling, right? So if too much of us or too much institutions start getting wind of what he's doing and they start putting on the shorts, he's gonna buy and reverse everyone's stop, right? And that's just as good as the distribution to get your Bitcoin because he's definitely going to take it on the way up as well, right? So it's a tricky game, you know what I mean? Like once there's too much players on one side, the operator is definitely going to take the other side of the trade and he doesn't have to hurry to bring this down. He could rally it back up, take profit up here and then start it all over again where he's gonna bring the prices down back to like 30,000 and stuff like that. So possibly there could be a double bottom around here of 49,000, 50,000, and we rally again. So I think that's like the bullish thesis there, but I don't think it's gonna happen, but could definitely keep that in mind. So finally, let me get to my trade here. Um, on the intraday. This is the 5 minute. So from a Wycoff perspective again, we had this downtrend. Let's see here. This was, what day was this? This was Friday, right? So Friday evening, we had this downtrend. We had the selling climax. And now on a higher time frame, I think all of this here, these past 2 days, excuse me, I think these past 2 days are creating the automatic rally, right? Now, if you notice on, let's see, this is Saturday, right? The high of this today's high is lower than yesterday's high. Now, on a bigger time frame, maybe on the hourly chart, this all kind of squinches together, right? So it doesn't matter if it's 2 days apart, the automatic rally is still in play here, right? So from a Wyckoff perspective, I'm looking for it to come back down to the lows here after the automatic rally. We're going to come back to these lows of 52,000, right? So with that in mind, let me just demonstrate how I took this trade last night. So I kind of held this trade overnight, right? So I'm going to put on the Camarilla R3 and R4, right? So let me just point this out here. This is Camarilla R4. That's Camarilla R3 at 54,435. This is value area high of 54,480, right? So we have like a double pivot right there, right? Providing resistance. And I just want to mention as well that Camarilla R3 has moved down from yesterday and Camarilla S3 has moved up from yesterday, creating an inside value day, right? Also on the value area high, the market profile has created the inside value day. So it's basically a compression of the pivot levels. So let me throw on Camarilla S3. And let me just take off the VWAP bands for a second so I can make it a little more clear. And now we could see, right, so Camarilla R3 moved down, right? Camarilla S3, which is this line right here, has moved up. So it's basically capsulating price right here. Now, the theory with this is you could actually range between these levels, right, for the day, or you can get breakouts from either side of the level. You could break out from Camarilla R3 and get a trend day, or you could break down from Camarilla S3 and get a trend day. So it's these are the possibilities of this kind of setup. Now, what I was looking for with the bigger time frame analysis of it being an automatic rally in the making, and we're going to create the secondary stop, I'm looking for this to be resistance, right? So I went short here, and let me just put on the VWAP so I could demonstrate this strategy. 1 second. So these are anchored from the start of the session here at 8 o'clock, right? So let me just try and make this a little bigger. All right, so this this here is going to be +3 VWAP. This is +2 VWAP, and this is +1 VWAP, right? So the strategy basically is looking for a pivot level, a resistance level, which I have value area high, inside value day, and Camarilla R3 as providing resistance, right? So that's my pivot level resistance. Then I'm looking for volume resistance, right? That's why I implement the volume weighted average price and the anchored VWAP and the deviation bands. So up at these deviation bands +2, +1, +3, this is where you start getting resistance, right? So if you look at the price action here, we're getting resistance at these upper bands, right? Resistance at these upper bands. And this is like the first instance of the setup here where you get a rejection of Camarilla R3 and we start going down to VWAP, right? That's the white line. Now I waited for a second test and I went short here, right? So I took the breakdown or rejection of +2 VWAP, right? So that's the setup for the Black Sun strategy. It's a pivot level that's coinciding with a +1, +2, or +3 VWAP, looking for the rejection there, right? So we got the rejection. I put my stop above Camarilla R3 because I was gonna hold this overnight. So let me just bring that into view. And it was quite a big stop, right? So I put my stop here at Camarilla R4 and just let it play out. So overnight it played out. We got a test again of, and this is a stop run, right? So this is how the market works. You might be on the right side. That's what I was explaining before. You might be on the right side of the trade, but too many people are seeing the short, right? And they're probably jumping into the short. So what's going to happen is a stop run. The market maker is going to run your stops. We're going to come back up here, take out everybody's stops, and then we're going to make the move, right? So this is another entry here. Well, let's say if I'm trading this intraday, I'm going to be stopped out quicker than taking this kind of swing trade overnight, right? So that's what I do. Like if it starts coming back on me or we come back to like VWAP here and you start getting that retracement, probably just stop out and let it do its thing, right? Because it wants to run the stops. So they ran the stops, came above Camarilla R3, and then we started breaking down again. So I was holding overnight. It broke down all the way to Camarilla S3, and that's where I took profit right there. So where I'm taking profit is actually just below the -2 VWAP, right? And I actually also have this one here. No, not that one. This is the London session VWAPs, and this one here is actually where I took the profit, right? So it's anchored from the London session at 3 o'clock. So with this here, right, came back down, we got the travels from Camarilla R3 to S3, right? So that trade is over. Now, what's probably happening here is another reaccumulation. This is my bowling green strategy where you get accumulation between -2 and -1, and you get a breakout of -1 here, and you could go long. And that's actually what's happening. It's kind of like a stop run or a mean reversion kind of trade, right? So that was basically the trade right there. And let me just go over to Bookmap real quick, and I could show you that trade here as well. All right, Bookmap, come on, speed up. And I have a lot of programs open, so this might take a little while sometimes while it's loading, while I'm moving it around. So let's see here, they have to load. Come on, come on. Right here. So I'm gonna highlight this. This is +1 VWAP, right? You can see the box there, and to the left, the red highlight. That's +1 VWAP. Let me just point that out. And that's +2 VWAP, right? So my entry was right here, a breakdown of, you see the value area high, inside value, Camarilla R3, inside value around this level here. I'm taking the breakdown of -1, and that's the entry right there, right? So let's see here. Take this